December 8th, 2023, information and support for traders and investors. Man, we have a lot to show you today. I know you're going to be really excited. A little bit of legal to take care of first. Everything we do on askSlim.com is for entertainment and educational purposes only, not to be construed as investment or trading advice. Sole purpose of this website, anything oral, written, anything that we do on videos, and anyway, referring to anything related to this website is to provide information which could be used by a person or entity in discussions with their investment advisors and or investment decision makers, and doesn't function as a substitute for the advice of that professional investment advisor. Always consult your own trading plan or financial professionals before making any investments or trading decisions. And please refer to our legal terms and disclaimers on our website. Always important. Today's hosts, we have the full analytical team, this fantastic team of experts in the markets and particularly in cycle analysis. I am, of course, a almost 50-year trader, coach, analyst, all of those things. I've been in the market since 1974, so my 50-year anniversary will be May 20th of 24. We have Matt Serpe, who's been with me for seems like forever, practically like my second son. Avi Ramachandran, also one of my favorite people in the world and a fantastic analyst, and Katie Anagostos, our newest analyst, but now is coming up to closer to 2 years. So great work that we see from Katie all of the time. So just so glad. You want to see information about us? Go to askSlim.com, meet the team. We all have interviews on there, and I think you'll be really interested in watching those if you have not yet. This is our contact information for membership issues or website issues, right? Team at askSlim.com. On anything that you see on this show, our content information on our education or analysis or first-time specials or upgrades, Matt handles all of that. So he is just on it all the time. And I know he must sleep sometimes, but he seems to be just working right through the night sometimes. Yeah. So just unbelievable. All right, so what we're going to do is encourage you to go to askSlim.com and sign up for Snapshot Lite. That is free. We'll get information every day. If you're watching this on YouTube, subscribe to the channel, click the notification bell, and like this video. Give it a thumbs up. And on X, follow us at askSlim. And again, write to Matt if you have any questions at all. Coming up in this show, I'm going to bring in my opening comments. We're going to do a first-time segment in here where the entire team is going to walk through their trade planning process using our analytical style, of course. So each one of us has our own trade idea. We didn't commiserate on this at all. So we just went out and said, well, what is one of our favorites? And you're going to learn our approach to trade planning. Then Matt is going to take over and tell you about how to give the gift of askSlim, where you give it to someone who loves trading or technical analysis, or to yourself. And upgrades are welcomed. And we're going to give you back a gift of an Amazon gift card, which is just amazing. Think about, you make that investment. I'm not a tax attorney, but that may be deductible. And then we give you back a gift card. You can ask questions if you're on here as one of our members, level 1 through 4. And we have questions that are coming in there right now, as I can see. Also, I'm then going to bring you my stock market analysis and more. I'm going to take a deep look at S&P 500, NASDAQ, and the Russell, and correlations to yields. And you're going to be blown away by this. And you're going to see our proprietary studies that I'm going to bring then, and actually throughout those whole session that we're having in here. And I hope that it is unbelievably valuable and interesting to you. How to watch the show? Well, premium members are sent a link to participate, and then they can ask questions. You need to be level 1 through 4. So if you want to do that, please do upgrade if you're a free member. Free and non-members, do watch it on YouTube on the askSlim team channel. And of course, we do have replays on this because I know you're going to absolutely want to watch what we're bringing multiple times. So that's how you can watch the show. Here is my opening commentary for the week. Well, the stock market spent most of the week chopping in a narrow range and ended mixed with really small changes. Each time the market went to the downside, it scared no one, and that encouraged buyers to come right back. We saw that all week long. The focus was really on the weaker economies, the Eurozone, China, and that helped yields in the U.S. move to the downside, with 10-year yields moving as low as 4.18%. And that started talk from the ECB officials about rate cuts in 24. And at the same time, Moody's warned on China debt. So there's a lot of warnings out there about slower economies. Even stronger employment numbers that came out here on Friday with the U3 at down to 3.7% as a result of more people coming into the workforce. That only scared the market for like 10 minutes. Indexes were down, but then they came back and managed to get back to the plus side, and now down just a little bit now on the day. So it doesn't really matter who's ever in the markets trading. They really can't keep the markets down for more than a few minutes. Tech stocks and AI, they were mostly firm, and AI is still the driver. And there is any one of the companies in the tech sector that says something about AI gets bid to the upside. Small caps also moving up sharply as there are constant bids. And we saw what happened on Friday as the NASDAQ at best level was up about 0.3%, and the Russell was up over 1% at the best level. So they're just in there buying those stocks, the small caps, very aggressively. The gains that we saw Friday at the high put the S&P 500 at important levels. So, of course, we're going to talk more about that later on in the show, but we have some resistance up there, and the S&P 500 has literally gone flat for about the last 2 weeks. That is what we call a swapping condition, and I'll tell you about that later on. Our analysis overall in the stock market has remained positive, and as our agnostic approach to charting has projected, that the market was bullish, and those patterns that we've seen have remained. There's likely to be some modest corrections, but we still believe that the market is telling us that it has more to go on the upside. When I say agnostic, it means that we listen to the charts. The charts tell us what the market is likely to do based on the sum of the evidence, and then, of course, we bring that to you. Based on the markets expecting interest rates to fall, you would expect that the market would remain strong. And while that's likely out there, that interest rates, I'm sorry, did I say remain strong? The bond market remains strong and interest rates come down, then that is believed that it's going to support the stock market. I'm going to show you something different later on that says that's really not the case historically. And I think that if interest rates are going to come down, that it's coming much later in 24. And there's actually market risk based on that. So I'm going to show you that later on. I think the markets have it wrong as far as interest rates go. And I think you're going to see that as we move forward. So we're going to show you so much more in this show than I think we have in most. And I think you're going to find most of that fascinating. For the week, stocks, little change. The Russell, the strongest, as most of them are just up or down by a small fraction. The Russell's close to 1% on the upside. Bond market, also little change. 10 years, they're at about 4.24% as they got down, just down to about 4.16% earlier in the week, and only around unchanged or up a basis point for the week. So little change there. The metals markets went berserk. At one point, they really looked like they were breaking out, and buying came in gold and silver. It was crazy. Gold has a $150 range on the week, and silver has a $2.80 range on the week. There was panic buying and then panic selling. Now, the silver market, which you can see if you watch the Future Speak show, or if you're a level 2, 3, or 4 member, that market really looks like it has a temporary top in there. You'll see a big weekly engulfing pattern, which is very rare. So that looks like it's made a temporary top. We're going to see the silver market, I think, and the gold market try to tick up next week, but I don't think they can quite hold. And we see the corrections that will come, I think, into January. But when I do the year-end show, I'm going to give you a bigger picture and tell you why I think much higher prices are in metals. Again, you want the analysis on all of our futures. Watch Future Speak on Wednesdays. Arvi does a spectacular job on that. Oil for the week, well, how about 7 weeks straight to the downside? Came from 89, which was a rebounded price, down to 69, and down over $3 in the week. So the oil market is extremely weak. And our analysis has shown that weakness as the momentum has been absolutely terrible. So again, our analysis will show you that rallies likely to come in the oil market are likely not to be able to hold. All right, this is a new segment. I'm going to turn this over to Matt.
All right, thanks, Slim. At askSlim, we firmly believe that a trading plan, crafting a trading plan, is a critical aspect of being a disciplined trader. This approach is particularly important in an environment where there are no certainties, only odds. And so with this in mind, as Slim announced, we're really excited to introduce a new segment to the askSlim Market Week live show, and that's trade planning with the analyst team. So in this segment, you're going to have a chance to see how Slim, Arvi, Katie, and myself put the askSlim methodology, which combines cycle analysis, momentum studies, and our fib swing high, swing low techniques into action as we go from analysis to trade idea. So that's the intro, and Slim's going to kick it off with his first review.
All right, I'm back.
All right.
All right. Yeah, this is going to be fun. What I really love is that each of us did this all on our own. And I'm just going to spend just a second talking about the nature of the analysis, because we do cycle analysis. And what that is looking at the energies of the market, the repeating rhythms that happen everywhere in nature. Call that the heartbeat of the market. And again, those of you that are not that familiar with this, then I really encourage you, go to our website to workshops. There's a free video on there and you will learn about that. So this is what a standard chart looks like with people that have moving averages on it. And I just wanted to show you the blank before that we put our artistic work on there. We all four of us do this. And here is the weekly chart as I now put on the cycle analysis. And I'm going to move over to the daily chart and put that cycle analysis on there. And this gives us just an absolute wealth of information. So my look here is a short-term look at Disney, and it is positive. So first thing is, what makes it positive? One of the key things that makes it positive is that you see this trend right over here where this cycle peaked right over here very early and then came down and made a much lower low. This is what we call a negative configuration and negative translation. The translation being that the cycle translated into a peak only in the second week over here and then spent the whole rest of the cycle moving to the downside, as you see right over here. This cycle might have increased in length a little bit. The low actually might have occurred right over there. That does not really matter because it came right in between, as you can see, the ideal trough period or ideal low period. And we have this all mapped out on all of our charts that Katie handles with the cycle low timing tracker. And then you could see right over here, momentum, which was measured by our reversal scout, came over here and turned up and gave us a sense that it was confirming the bottom in here. And then Disney came to the upside. Of course, Disney has had some very bad news, changing CEOs, and also in regard to some of the political things that have gone on that have gotten in their way here. And that's why the stock has gotten hit. But the question is there more value? Well, I'm not really looking at value here. I'm just looking at energies. And you can see in here when we got above that level right there, that last cycle, that was a breakout. You could see that it is highlighted right over there for our members. And I'll just open this up right over here. And you can see as it got above that level, it is positive right there. And that said to me, well, this is now a positive stock. When I go to the daily right over here, you can see the magnificence of the cycle movements in here, just perfect rhythms right there. And you can see beautiful rhythms right in here. And then this last cycle was configured very strongly. This is practically a swamp cycle. In other words, the upside energies were so strong. You can see the slim ribbon stayed positive, the slim ribbon PO giving you these upward signals that momentum was coming back to the upside. And how you can see right over here, it is turning back up. Upside projections, there's the minimal target zone right over there sometime in the next several weeks. So this is a short-term look. I would project it to get up here to 98.5 to around 101 right now in this next 2 or 3 weeks, and maybe even above that level. So that's a very, very positive pattern. I see some hands going up as you resonate with that. The upside right over here, big resistance 103 and then 104.35. So those are potential upsides, but this is a very bullish pattern. And in my opinion, just getting ready to move back to the upside. That is my look at Disney, and I hope you found that great. We're going to turn this now over to RV.
All right, Slim. Thanks so much. Great look there at DIS. Certainly like that one as well. Let's pull up Nucor. That symbol NUE. That's the one that I'm going to share with you. Just give me a second to make sure it loads. So this is our weekly and daily cycle on Nucor. And
I don't think we're seeing your. Are we seeing it?
Can you see it? You should see
Yes.
a chart, a
Yep.
weekly chart of Nucor.
Nucor weekly. Yep, just popped up.
Okay, perfect. So we have just formed that low right here, and then we got into that new rally mode here in NUE, and are right now just putting in this higher low. We're going to be looking for this to turn back to the upside and rally up through this old high at 174.92, and then we have a zone here from 175.57 up to 184. Around there is where we will be overall, looking for this to rally up into on this really small flag that I think is really forming here. Shift over and you can see what's happening. There's also a low due here over the next few days. Just looking for one more test down, hold this zone right here that I've highlighted here, and then look for this to turn back up and then move through this old high there at 172.81, and we have this old high here at 174.92. Okay, and if this is to actually move through 152.58, then this would be marked as a loser trade idea. Okay, so that's the overall look there at NUE. Watching for just one more hit down, and then for this to turn right back to the upside. And now we're going to go ahead and shift over to Matt, correct?
Oh, Katie will go next.
Okay.
Thanks, RV.
Yep.
Okay.
Great job.
Let me take the screen. And let me know when you can see the cycle low timing tracker.
Yes.
Yep.
Got
Very
it.
good.
Okay, so I'm looking at Boeing for a possible trade setup. Boeing is found over here on the cycle low timing tracker in this box called cycle timing period of risk, and we're in the daily time frame. So as it forms a daily cycle low, it will also appear over here in the bottom pending box and then in bottom confirmed, but it's not in any of those yet. So no sign of a cycle low having formed. I'll be showing you that on the chart. Now also notice these green boxes next to the symbol. Those are a visual indication that conditions based on momentum and cycle phasing are currently positive in the intermediate and short-term time frames. And I will now switch over to the chart. Let me get rid of that box. Let me know when you can see the Boeing weekly chart.
Got it.
All right, so this is the weekly chart. On the bottom here, we have a dominant 32-bar cycle with minor half cycles. We are 6 weeks off the cycle low that formed right here. And we have positive momentum with a green reversal scout. That's this green and purple ribbon on the chart. It helps us to identify cycle lows and cycle peaks. So we're now approaching this prior cycle peak, and the next level above that is the confluence of this other prior cycle peak and the 127.2% fib of the move from here to here. So that range is about 258 to 261 approximately. And when we switch over to the daily chart, you'll see more clearly that we've had a very dramatic move to the upside. And this is the daily cycle low that corresponds to that intermediate low. Our reversal scout turned positive here. It's a little bit faster than the slim ribbon, which turned positive here. And now we are inside this daily cycle timing window that is indicated by these blue vertical dashed lines. So that's a period of time of several days around this ideal cycle trough when we expect this daily cycle to form a low and then to begin to move up into the rising phase of the next cycle. So that's why Boeing is on the cycle low timing tracker in that cycle timing period of risk box for the daily time frame, because we are inside this window of time. But no sign of a cycle low yet, or even really any retracement. This is a swamped cycle, like Slim was talking about with his symbol. And that means we've used up the entire cycle rallying, leaving very little time for a retracement. And this condition is one of the reasons I chose to talk about Boeing today. Everything is showing bullish, but we wouldn't want to enter alongside trade yet. We want to wait for a retracement so that we're not buying at the top. Ideally, I'd like to see us get down into this support zone and then turn back up to set up a high probability long side trade. Now, that may not happen based on the strength here. So at a minimum, I'd like to get down to this 23.6% fib, which you will notice is inside the slim ribbon here. So if we can get that retracement, then the lower time frame momentum may switch neutral or negative, and we could use a return to positive momentum on that lower time frame chart for an entry signal. So Boeing is a relatively expensive stock, so a long call or even a call debit spread could be option strategies that you could employ in a low volatility environment to take advantage of an upward move that would use less capital than buying the stock outright. So I want to scroll back just really quick here on the daily chart to show you a similar scenario that occurred with Boeing in the past. Here we had a powerful upside move off an intermediate low, very shallow retracement of just a couple days that made it into the slim ribbon, and then a continuation to the upside. However, another scenario is this powerful upside move, shallow retracement, and then an upside move that stalls and turns into a period of consolidation. So if you start to see this happening, then you might consider a more neutral option strategy, such as an iron condor. And that is all for Boeing. We'll switch over to Matt.
Great work.
Awesome. Yeah, great work. Great
Yeah.
work, team. All right. So I'm Matt, and I'm going to run through my trade planning segment. Let me just share my screen. Okay. So as part of my segment, I also wanted to share the process I use to identify what tools on askSlim to find the symbol that I was going to do my trade plan on. And so I started with the charts hub. Or if you can just raise your hand if you see the charts hub. Okay, excellent. So our charts hub is a fantastic resource to be able to efficiently get access to our weekly and daily cycle analysis. So essentially you can click on any one of the focus list symbols that we have on the left-hand side here, which include stocks, ETFs, and various futures markets. And as I was running through the symbols and having a lot of fun checking out all of the work that the team does, I settled in on GS, and GS caught my attention. And as I wanted then to shift into a work mode, analysis mode, I jumped off of our charts hub because that gave me the idea around which symbol I was going to select. And then from there, as RV, as Slim, as Katie did, we have the awesome opportunity to jump directly into the grids that the team prepares. And then I was able to do my work off of it. So the symbol I selected again was GS, Goldman Sachs. And we're doing here our trade planning process. And that trade planning process has 5 key trade planning questions we want to answer. And you can see how Slim, RV, Katie all answered these questions as we go. Number 1, what's that outlook period? Very important to be able to identify your outlook period, because then you're going to go do your work off of those charts around that time frame. And number 2 is directional bias. You need to have a way to filter the market information so that you can determine your directional bias. And as each one of us step that through, we look at our cycle patterns, our cycle structures. We look at the translations of the cycle. We look at cycle timing. We look at momentum. And I'm going to step through real quick how I identified my bias, which was on the long side or more bullish. So you can see here that GS made a cycle low, and then in that next rising phase to peaking phase, we made a peak out over here. Well, when that trough came out in October-ish, late October, it came over here, and that's our anchor point. If I use our fib extension or fib retracement tool, that will give me a sense of some key levels. And a very important level for us is going to be that 78.6, which was right around this level here. And once we actually, if I redraw this one, I missed that. Here we go. So I can be more precise. Should be up here on that fib, that 78.6, which suggests that we now over the last 2 weeks, we're going to have 2 closes above that 78.6. Which suggests there is a shift in that daily or that weekly cycle pattern, opening up the door to continued higher prices. So now that I have my bias in place, I also then want to, which also is determined by momentum. So we have our momentum study on here, our reversal scout. That also gave me the indication of a current positive momentum condition, along with the positive cycle structure warning, and the fact that we have a good amount of time left in this rising peaking phase, which could go out for another couple months. It doesn't mean we'll have a linear move straight up, but there are high odds that the upward advance is likely to continue. And then from there, we want to pick out our key levels on the upside. We want to identify our reevaluation. And based on this overall positive condition, I used our swing high, swing low analysis, which helped me then to give 3 upside projections. And based on the current positive cycle structure, the first one would be that cycle peak. So that would be projection number 1. And then using the swing high, swing low analysis that I did, there are 2 upper projections. One is more of a maybe an extreme look, but GS has put in runs of over 100 points in a rising peaking phase. So it's not out of the question that if it did it again, we could get up into that 3rd projection zone. To get a real good look at the condition on the daily chart. So again, I'm looking at a 3 to 8 week outlook. But over the short term here, GS is still very powerful. And as Slim described, and RV and Katie, we look at the cycle translation, and GS is going to have a positive right-hand translation where the peak is going to form in the right-hand side. And given the current strength of this move, there's potential that GS might not peak until it gets up into these upper boundaries that I've identified here. Now, similar to the team, also we're coming into that late peaking phase where a pullback is going to be likely, and looking at it being a rather shallow corrective period, getting into maybe the 23.6 to the 38.2 from that swing low up to that peak, and then looking at those being potential entry areas. If it got below this level here, right around 319.50, that would suggest to me that I have to reevaluate this overall plan. But based on the current pattern structures, pattern translations, configurations, it is suggesting to me that off the daily chart, that this would be a key upside projection zone over the next 3 to 4 weeks. One more piece of information that I wanted to share as part of what we offer is that you get access to what we call our raw, this is a chart streams grid, but a raw multi-time frame grid where you can plug any symbol of your choice into it. And it's really helpful as you want to get into the actual entry and exit scenarios of these trade ideas. And so I talked about an intermediate, and I talked about a sort of a short-term outlook with GS as well. And when you get into the multiple time frame grid here, and I'm looking at the 2 hour, it's really helpful to then be able to see when the likelihood of that next leg up or down is in motion. And it also helps then to determine some potential reevaluation levels depending on your time frame. And so I'm on that 2 hour side right now, and you can see today that both of our momentum indicators turned back up. So a reversal scalp plus a slim ribbon turned back up. This would suggest that we probably have some more room to go on that upside. And if I was looking at those targets based on that swing low, a swing high, swing low here, then I would be looking in that near term 352 maybe to 356, where we might make that peak and then come back into some support area before we make that next advance. So there's my look at GS. Hope that it was helpful to everyone. Back to you,
Matt.
Slim. Thank you.
Really good.
I would say that was fantastic. Just great
Awesome.
work from Matt and the entire team. So this is great. All right, so I'm going to grab this back and we will move on. That was just 4 pieces of analysis that is just such a good look at the commonality and the way we look at our analysis and how very different we are from so many other sites. I'm pretty proud of that. Great work. All right, so we're going to turn this back over to Matt, and he's going to bring you this information on Give the Gift. And this is something you really want to watch if you love our work.
All right, thanks, Slim. This will be very brief. I wanted to give everyone an update on our current specials. These are the best specials of the year as part of our program that we do. There is a few weeks out of the year that we put this together. And as Slim mentioned at the start, this special that we offer, our holiday specials, are unique in that we give you a gift back. So we have gifts available at level 2, level 3, and level 4. And they are deep discounts on our quarterly specials, and they are 35% off. So that's a significant discount. And then on top of that, depending on which level that you purchase, you will also get back a gift from us, which is in the form of an Amazon gift card. So at level 2, you would get a $20 Amazon gift card back. At level 3 would get you a $50 Amazon gift card. And if you were level 4, that means you get a $100 Amazon gift card. Now, how this works is if you are currently a member and you upgraded, then you would qualify for that gift opportunity. And also, if you're currently a member and you bought it for a friend who has an interest in deepening their knowledge of technical analysis or getting into understanding the trade planning process, the various phases of it, you would be able to purchase that and also get that Amazon gift card. We are looking at an opportunity for our level 4 members. We appreciate your loyalty and commitment, and looking to bring you also, and we'll be finalizing that and sharing that with you next week. So that's a look at our gifts offering that we have through askSlim. A couple final comments is that as you saw each one of the team members run through our trade planning process, we utilized all the services from askSlim. So everything that you saw are available in our memberships. That Charts Hub is available in obviously all 3 of these memberships, but it starts off in level 2. If you want direct access to those live charts where all our annotations are, and you can get under the hood, see our proprietary indicators or studies, and add your own work to that, that would be at level 4. To get into our trade planning tools, where we have the ranking system, our market conditions monitor, and several other trade planning tools such as Arby's Trade Ideas and Katie's Options Trade Ideas, then that would be at level 3. And that also comes with a significant level of access on our Discord channel. So that again would be a level 3. So there's the offerings and an overview of what you're going to get back from us as well. All right, back to you, Slim.
Okay, I am back.
Okay.
All right, man. I hope that people really take advantage of that because they will love it. Remember, the Give the Gift is a non-recurring membership.
That's a good point.
So you can, upgrade
Try it out.
and, try it out. Go back to your other level if you want to do that. Or if you give it to somebody, you don't have to worry about them getting renewed because it's not renewable. They'll make their own choice. So this is a great way to get a great look at the work that we do. Thanks for bringing that up.
Yep, welcome.
This is our Q&A, and we have enough questions right now in the Q&A that we will not be taking any more, so thank you all for that. I'm going to do the commodity side, and the rest of the team is going to do the stocks and ETFs. I know they have been preparing their work on that while this has been going on. The two that I'm going to look at, or three, gold, or dollar versus gold, and also the light crude market. And then I'll turn it over to RV and to Katie. All right, so let's just now switch over to my charts. And I was still looking at Disney here, but we're going to turn that off and put on the gold market /GC. Now, for our members, there it comes. I do updates on these regularly, and our level 4 members get those immediately, and our level 3 members, 2 members, those who get our charts hubs, they get them just several hours later on the next day. So this is what we have right now going on in gold. Now you see that giant reversal, this massive weekend here of over $150. That when that happens, that is pretty much determining that a peak was made on the intermediate term. You can see the same thing right over here. Now, what is that yellow area right over there? Well, I'll tell you that in 1 second. So here you could see that reversal. And if you look here on the minor cycles on the bottom right there, this calls for a corrective period in here. And when that trough finally forms, and you can see right there on the bottom, that sets up the next rally. That would be in alignment with when this cycle on the daily chart ends, because this right over here comes out sometime in January. This low over here is expected sometime in January. And these two cycles right over here, this one and the minor cycle here on the weekly, will sync up. And that means that there's a rally coming in here over the next maybe week or two, and then coming back to the downside. This did not complete yet, this downside cycle, as you can see very clearly, as it is still running to the downside. So it's a little bit late right there. Let's just take a look here as we blow up this daily chart, and you can see that if you look at all of these yellow areas, those are what we call the periods of risk. The periods of risk are when money flows out, usually when there is a synchronization of cycles. And you can see right in here that the dominant cycle was coming down, the minor cycle was coming down, and you get the bigger break. Same thing here, and here. And that meant that this correction was due, what really was the anomaly was that big upside move. And then it came down and continued the correction right in here. So we're actually still in an area of pretty significant support. And when you look here on the gold market, on the weekly chart, the supports here are between 2026 and 1985, and I would suppose this would chop around a lot in there in the gold market. When I switch over to the dollar, because the dollar is often inversely correlated, if we're looking for a rally in the next week or so in the gold and silver market, you'd be looking for a sell-off in the next week or so in the dollar, and that's exactly what we're looking for in here, as this cycle here is pointing to the downside. So we kind of see a choppy period ahead for the dollar and for the gold market and silver market. But look here, this looks to us like this rally has begun on the weekly chart in the dollar, probably has some upside. You see momentum in here is coming to the downside on the reversal scout. And it really says to me that maybe some chop in here, but then the dollar could get hit very hard here out into March. And that's a period we think that the metals markets could do better. So you could see how there is an important correlation going on here between the dollar and the metals markets. The dollar likely to have a little pullback in the next week, the metals markets to try a bounce, but not likely be able to hold. Also have a question on light crude. We'll take a look in here as this has been plunging to the downside. I'm going to blow this up right over here so that you can see this light crude market. Now, if you look at the minor cycles in there, you can see the rhythms, they're really good. And that is this cycle right in here is a minor cycle. Here's a minor cycle. This was very strong right there, as you can see. And then this rally came right there and it made a new high as it's supposed to. And then it broke down. Once it breaks underneath this level, there was actually a 78.6 warning level in here that I took out. And that told us the bad condition. So what does this say? This says that there's a bottom due in here and then some kind of a rally. But should that rally hold? No, because this is the real period of risk out over here, out into this February, March period. So potential rebound, but then fail out into February and March. Look at the magnificence of the cycle patterns in here and how cycles form the head and shoulders top. That's I teach that in one of our modules in the cycle analysis workshop. And then it came down and made the measured move as it got down to this level. It was perfect. And now you could see in here potential rebound, but then we're looking for more downside in alignment with what we see on the weekly charts. We do multiple time frame analysis using weekly, daily, and even monthly, and then of course some intraday charts. But the cycles we look at predominantly are in the swing trade length of time, which is in the daily and weekly charts. And you can see in here on the weekly potential rally, you could see in here on daily on a potential rally, and that gets to the sell zone right over here. If you get a rally to about 77, it is likely then to get slammed after that with a projection out over here probably to as low as 65 in the light crude market out into the late winter to early spring. That is a look at the two that I'm going to look at in here. And now I'm going to turn this over to Arvi and Katie, and they're going to take the rest of the symbols that you asked for, or those that we can fit in. Take it away.
All right, guys. Thanks so much, Slim. Appreciate it. Let's go ahead and first jump over to GDX, which is the gold miners ETF, because we were just looking at gold, and obviously it is rolling down. Just give it a second to load up the screen share. Okay, so this is our weekly and daily chart for gold miners. Sorry, let's pull up the intermediate term time frame. Now you can see we formed our low that was due here, and we got into this rise that you're seeing right there, but then a clear failure right now, and we are now looking at this low, which is due right around year end. So we'll be looking for this to pull back. Now we have to watch closely to see where does this low form here. If it can hold above that 78.6, that would be really, really key. And that's at 26.95. A loss of that level would have this turn down like that here in the GDX. If it can hold above that level and ideally hold above this 61.8 fib at 28.06, then we would actually look for a move like that back to the upside in the GDX on the intermediate term. So that would be ideal. Shift over now, you can see right now a clear high that has formed right there, and we are pulling back a low that is due over the next, let's say 2 to 3 weeks here in the GDX. So in the short term, we would be looking for only a series of lower highs and lower lows into this next low that is due here. On the downside, we have levels from 28.87 to 28.10 here in the GDX. Okay, so that's the look there. Gonna also show you TSLA, that is Tesla, of course. Okay, so this is Tesla. We'll pull up the intermediate term. Also formed its low right there, and then got a rally. Now, overall, we would be looking for this to fail in this zone from 246.30 to around 261.90 or so, and then get one more look back at this low, and that is at 194.07. This low is due, it looks like right around the early part of Q1 of next year. Now, if this were to move through 261.90-ish, then that would shift what we see going on here. So it is really key for us to hold below that 78.6 fib. Shift over to the daily chart. Again, we are just chopping around sideways here. In terms of our levels, we're looking for this to fail in this zone from 246.64 to 260.91 in that zone, fail and then roll back down. We have a daily low that's due also towards year end here. We're looking for a move down into this zone from 229.87 to 216.75. And then I'm going to go ahead and show you ANET, and then I'll hand it off. So what we see on the intermediate term here is just a monster pattern. You can see a series of higher cycle highs, higher cycle lows acting beautifully, and still clearly really only a few cents off highs really here in ANET, with a low that is also due around Q1 of next year. If we shift over here, you'll see that we have just likely formed a low here. There was a low due. We are now trying to turn back to the upside. We're looking for a move in the short term towards this this zone here from around 230.180 to 230.830. Around that zone here, we'll be looking for a rally up into that zone, and then we'll be watching to see if it fails in that zone or not. A loss of this low at 210.69 would really raise the odds that we are seeing a key high form on ANET. Okay, and now I'll go ahead and hand this off to you, Katie.
Okay. Let me know when you can see the weekly chart of XLRE.
We're good. Yep.
Okay, great. So this is the Spider Sector Real Estate ETF. And on the bottom here, we have these cycle brackets. They're a drawing tool. These are 31 bars in length, and you can see they've been relatively consistent over time. Here we started to get some shifting, and then as often happens, we had a very short cycle that snapped it back into the about 31 bar cycle. So this was a negatively configured cycle right here that ended lower than where it began. So the probabilities suggest that we would not be able to take out this prior cycle peak, but you can see that we are only 5 weeks off of this low and approaching that cycle peak. So if we are able to breach that level, then the next levels up are this intermediate 127.2% fib at 41.16, and then this prior cycle peak back here at 42.21. We do have a rising support zone, positive momentum, just a very small pullback this week. If we switch over to the daily chart, you can see this is the move off of that intermediate low. We're in the very last day of the daily cycle timing window. This is a very shallow retracement. We've just gotten into the very top of the slim ribbon. So maybe this will extend out a few days, but again, looking very positive. Now we're going to go and look at the stocks 50 FEZ. All right, we have 27 bar cycles here. This was also a negatively configured cycle with that same presumption. We've had so many stocks that are repairing themselves now. We wrote that here, repair level. It's gotten through that 78.6% fib, approaching this cycle peak. And if we are able to get through there, our next level up is 49.34. That is very closely aligned with these cycle peak resistances over here. So we would expect some significant trouble getting through that level. We do have this rising support zone in case there is a pullback. So we'd like to see it contained within this support zone for another move back up. And we do still have positive momentum in here. This is the daily chart of FEZ. Let me see if I can zoom in. There's the zoom in, and let me shift it over. That move off of the intermediate low, and we have a daily cycle timing window when we would expect this large daily cycle. This is a 53 bar cycle. It's quite large to form its short-term low out in the beginning to middle of January, 111 to 122. Here's our level. That's the prior cycle peak resistance that we are targeting and our rising support zone. That one also is looking positive, as are so many others. Here is AMD, Advanced Micro Devices. This was our intermediate cycle low. This, unlike the others, was a positively configured cycle. It ended higher than where it began, but it did have quite a deep retracement. Now we are again approaching that prior cycle peak. If it can get through there, we have this zone that runs from 133.84 on the bottom to 144.92 on the top. for a target and this rising support zone. Now we do have minor half cycles here, and this ideal trough is January 21st. I will say plus or minus a couple of weeks there. So this next daily cycle may exhibit a little bit of weakness or even a breakdown if we're going to have a significant retracement in here. I do have an options trade idea of a strangle out in here, and the top of that strangle was at 145, which is up here, and the bottom of the strangle is at about 110, just below the middle of this support zone. And here is our daily cycle. You can see we're just 2 days off of that daily cycle low. Momentum has returned to positive. We had this very large bullish candle yesterday. Again, because this cycle is aligning with that minor cycle trough on the weekly, we are only projecting up to the 50% extension at the moment. If it can get through there, then maybe up to the 61.8. We do have a daily cycle timing window, the beginning of the year, January 3rd to January 11th. This is still looking positive.
All right. We covered them all.
We
Great
did.
work. All right. Let's take back this. There we go. You should see me. And a couple more things. There's a question from Scotty that is just, it's not possible that I answer this right now, which is, can you please do education on money management, stocks, short, long, and option debits and credit spreads? Well, that would be probably more than one whole long video doing that. It's really a great topic. And I'm thinking back to the almost 1,000 videos I've done probably in the last 10 years. And I don't think I've done one that really focused on that. So I'm going to think about that one and maybe bring something later on, Scotty. I just can't possibly handle that right now. And BP says, happy Hanukkah to all my Jewish brothers and sisters. And yes, we want to wish everybody a happy Hanukkah out there to all of our members and all of their families, and want everybody to be incredibly safe now and forever. All right, so let's now move on. We have just covered great stuff, and I hope you found great value on that. And I'm going to jump into the stock market analysis, what hundreds of you have been waiting for right now. So we'll take a look. There is some important information. Please do read this slide. It tells you about our approach to the market and what we encourage you to do about using our information, especially the aspect of trade ownership. So I even have videos on that, on trade ownership, really important. And I do want to remind you that you can see our stock market analysis daily. Matt sends this out. It's fantastic. That is our Snapshot Lite. So you get the information on the S&P 500. If you go to our website and just, you can see right in here, you can get that information. Just put in your name and email. There's no credit card necessary. And if you're not currently a member at any level, then this is a great place to start to get our free information every single day. You'll get that in email, and just come here and subscribe. All right, stock market, multiple time frame analysis and projections. I'm going to look at the comparison of the monthly S&P 500 versus 10-year yields. I think this is really important to this discussion. Usually I save the monthly work for the year-end show, and those of you that are not members that you want to watch the year-end show, you can watch it by becoming a free member or sign up at the front of our website for the Snapshot Lite, and then you'll be able to see our year-end show. So I'm going to look at the monthly S&P 500 versus 10-year yields, and this is extremely informative. Then I'm going to look at weekly yields and the 10-year notes, because I think that's very important to the analysis. And I said earlier in the show, and if you're only here scrolling forward for the stock market information, well, bad on you. But in the beginning of the show, I talked about the fact that I think that the markets have it wrong in some way regarding what they're anticipating is going to happen from the Fed next year, and how soon they're going to cut interest rates and how many times. Back to the stock market, as I was talking about the importance of looking at the 10-year yield. So we're going to take then a deep look at the stock market also. And I think that you're going to enjoy seeing me use my proprietary indicators, and that will be beneficial to all. The first thing I want to look at is this. Let me get back in gear here. So this is 10-year yields and versus the S&P 500. And this is, just great correlations. We're looking at the S&P 500 back here to about 1998. And this line that you see right over there, that line is the TNX is what that is. Sorry, coming back here. So what I want you to see is that yields correlate unbelievably to the stock market. When the stock market is rising, as you see right over here, yields are usually rising. When the stock market is falling, it encourages the Fed then to start to cut rates, and yields are falling. Look at the amazing correlation going back here for 24 years, as you see that the prospects for the stock market are essentially the prospects for yields. So right over here, you could see what we're seeing is the stock market rising since 22 and yields going back to the upside. Now, you saw what happened here. The stock market had a downside move and yields moved back to the downside, but the stock market is moving up again. That is very important when you look at this. If stocks are going to continue up in 24, which of course all the bulls believe, then yields are not likely to fall. If yields are actually going to fall, then the stocks must have big risk. I mean, it's just the way it is. So if yields are going, if the bond market thinks they have it right and yields are coming down and the Fed is going to react, they're only going to be reacting to a declining stock market. You can see. So this looks like stock market moving up, and yields are likely to turn back to the upside. As you can see, that is just a blip on the downside. As you can see, you had a blip on the downside here, and then yields began to move up again. And you get lots of chop in yields, as you can see, and that's basically what happened in here. But is there a reason to believe that yields are going to move down? Well, if that's the case, there's reason to believe that stocks are going to move down. I think the Fed has it wrong, because I think the stock market is not going to do all that bad. And I'll tell you about that at the end of the year. And that means that you're likely to get a rise in here again in yields. If the stock market turns down and has a very big decline next year, then the market will be right and yields will be moving down and the Fed will be reacting. That's the important look right there as we look at the comparison, which says stock market, it has to break big for the bond market to be right. Is that going to happen? Well, that's a big question. Let's take a look here as we look at the 10-year yield. So I'm looking here at the weekly 10-year yields. I'm going to maximize this, and you can see that with the way the cyclical patterns are aligned, it looks like this break right in here that you see is not over, because you can see that this alignment says that yields are likely to keep coming down here for a few more weeks. The low in here is due sometime between the end of December and around the third week of January. So that means that you're likely to get yields still under pressure. And if there's a rally in yields, it's likely to come down again. And then you can see right in here, yields are likely to move up, potentially up here to 4.8%. Sometime in March or maybe April would be the peak in yields. Nobody is talking about that except me. This would be a shock to the market if that happened. So a look at what looks like some risk. Let me just get a little bit closer look in here, and you can see what that looks like. Yields moving down for a few more weeks, possibly testing 4.06. That was our most extreme target on the downside, and then moving up. Now, the fact that it broke 4.24 yield under that 78.6%, it warns of a major top. So that says to me the upside is likely not beyond that 4.8. But believe me, that will be enough to scare the market. Let's take a look here at the ZNs, because I'm telling you yields likely to go up into that March period. If I look at the ZNs, which are inverse, it should be telling me that there's going to be a move to the downside here in this market. And you can see in here that our projection is in the 10 years that they're going to move down and potentially get close to that low down over there at 1.05 if you're going to get up to the 4.8% yield. And how reliable is this period of risk that you see right in there? Well, let's look back in here for an extended period of time. I have the last 3 full harmonic cycles. I'm sorry, 4 of them for you to see. And you can see in here when you're in the 4th minor cycle and the corrective period in here, you get the biggest decline, and the biggest decline actually that belongs right here. I had it in the wrong spot. And then right over here is where the next one is. So we're looking for a decline in here out into March, which just is in a perfect alignment with, going back to TNX, the rally over here out into the period out there in March. And that tells you that there's a very strong likelihood that the market is wrong, and that we're going to see these 5 potential rate cuts that are priced into the market for next year change dramatically, at least out into that period of the late winter or early spring. That could be trouble for the stock market out into that period, because it would be quite a surprise. Let's take a look here as we look at the S&P 500 on the weekly and daily chart. And you can see in here that it looks like the market has made an amazingly strong period in here. I think I have a slight update to that. No, I don't. That's it. This is the last one. Now look at the daily chart right over here, and you can see what's happened is that it's basically run flat through this whole period. And now coming up here, that 4607 is a very key number. And it looks like this period in here ended with just this incredibly swamped strong right-hand translation. That's coming because look at the slim ribbon. You can see very powerful. You can see in here the slim ribbon PO on the bottom giving you the upward signals of momentum resumption. And you can see in here on the weekly chart as this comes up in here into strong momentum on the reversal scout. I'm going to take just a little closer look in here because this side-by-side analysis is very important. You can see in here that the projection out into early part of next year could be a lot higher, even up to 4750 on the S&P 500. But there's likely a bump in the middle. And you can see right here that this minor cycle corrects on the downside. Whoops. Having tech problems today, as you can see. Corrects on the downside right into this period right here, right there, which says that that is sometime into right around February 1st. That could very well coincide with the yields moving to the upside into that February 1st period. I said March in the on the analysis in the interest rates, but it doesn't have to go that far. It could be only out into the late February, early February period. Here, right over here, is also a decline out into that same period right there. So that looks like what happens is that this cycle, which is now looking like it's moving up, is likely to roll over somewhere in here and then come down into that period into late January or early February, aligning with this right over here into late January or early February. That means that the next rally over here probably fails, and fails pretty quickly. And again, this resistance area right over here, it was 4601 to about 4607, 4608 right there. In the weekly chart that is brought over here at 4607, we have it listed there. And this could be an area where it has some trouble in the stock market. Now, remember these cycles in here. This peaking at some point, coming down here into late January, early February, this rallying up here and then coming down on the daily chart into the same time frame. Let's look here at the NASDAQ and make a comparison to that. And you can see here, looking at the NASDAQ the NASDAQ is making that much clearer to us, because you could see that this cycle right over here actually came down, got close to that 23% into the slim ribbon, powerful, giving upside resumptions, and then beginning to move up. What does that do? It tells us that you're likely to get up here to the 16,170 up to potentially 16,500, let's just say, if it runs a little past that, 16,480. That's this period right in here. And then these come down, yes, into the late January to potentially early February period. Same thing right in here. So I believe that that period where interest rates are likely to move to the upside is projecting that you're going to get one move down over here into late January, early February, an attempted move, and then this comes down into April again. So that could be an extension of that period of higher interest rates. We're looking at a pretty choppy period over here into the first quarter of the year, and I think influenced by the fact that interest rates are not likely to go down anymore and likely to surprise the market and go up. The last thing I'm going to look at in here is the Russell, which has a life of its own, and the cyclical pattern's quite different. And you can see in here in the Russell that actually the cycle pattern is different. The low is due out over here in the third week of December. So in other words, potential pullback right in here, and then another rally out over here into January, and then a pullback into that same time frame, into that about the third week of January right there. So this may get more in alignment. You can see in here, this pulls back into the February time frame once this peak is made, but there's a shot over here up to 1925 at the same time that there's a shot for the stock market to get up to 4750 in the S&P 500. So this a key time frame now after a pullback and then a rally here in the Russell, and then I think it's chop ahead out over here into the first quarter of the year. That's what we're looking at, I think. And I think that what I showed you regarding interest rates really makes a ton of sense to me, and that we're going to see a bond market move to the downside in the first quarter of the year, and a pop in yields that is going to scare the market, and the stock market likely to be in a much choppier period with only minimal upside. Now, remember, we're trading up now. If on the extreme, it's able to rally up to 4750, we're only talking about less than 4% more on the upside. I think that that's not a strong likelihood, but I need to talk about that when I look at the stock market. So that is a look in here, and I hope you found that just incredibly interesting for the stock market. That's it. Guys, gals, you with me here?
Yep.
We're here.
Great.
That was awesome,
Great.
Slim.
Great work.
Great job.
Thank
Super.
Yeah. Thanks. I
Really
hope
interesting.
everybody really found that incredibly interesting. I want to remind everybody to sign up for Snapshot Lite and choose to give the gift to yourself or somebody else. And you can upgrade if you're a level 2, 3, but you can also buy that for yourself. If you're a free member or level 1, go up to level 2, 3, or 4. I had a lot of fun, except for my platform crashing here.
It's okay. It all
What are you
turned
gonna
out
do?
well.
Yep, all good. Great job,
Yeah.
everybody.
Yep.
Great.
Awesome show. A lot of fun.
Fantastic. All right. So we're going to be live again in a couple of weeks. Next week is a regular market week, and we'll be getting ready for you then. Happy Hanukkah to all of my Jewish friends and members. And that's it for today.
All right. Take care.
Have a great weekend.